Hey, folks, welcome to InTheMoneyStocks.com's intraday analysis video, brought to you by the creators of proprietary price, pattern, and time methodology. Learn the PPT strategies and profit for life. My name is Gareth Soloway, Chief Market Strategist here at InTheMoneyStocks.com. All right, folks, into the action we go today on this Wednesday, May 7th, 2014. Right now, the markets are mixed on the day. You have tech getting hammered again off of poor earnings from the likes of Groupon, FireEye. We see Twitter getting pounded again today, down another 5.5%. Facebook, a lot of these social media stocks getting rocked today. And the NASDAQ, again, is selling off 32 points. And this is very, very unusual to see such a divergence between indexes. What do I mean by that? Well, the NASDAQ's down 32 points. The Dow is up 95 points. The S&P 500 up 5.5 points. So, I mean, you're seeing the NASDAQ down 0.75%, while the Dow is up 0.6%. Very unusual. Now, it's not unusual to see the NASDAQ a couple points to the downside, while the Dow is maybe a couple points to the upside. But to see that much of a divergence is extremely unusual. And again, there is money. And this is the crowd mentality, kind of the stampede mentality, if you will. And ultimately, it's going to give us a great buying opportunity on a lot of stocks in the tech sector when they bottom out. The question is, when do they bottom out? But I would say in the other sign or in the other course of action, it's going to give us some great shorting opportunities on certain stocks in the Dow. I mean, there are certain stocks in the Dow that have absolutely no reason to be up where they are. At PEs that, now some of the tech sector stocks that are high beta plays are now approaching some of those PEs. And you'll see it's just a rotation of capital. And that's all the market is, folks. Once you get good at reading the markets and investing and trading, you realize that the market's all about money flow. Money flow, money flow, money flow. Where's the money flowing? When has it excelled to the point where it's getting overdone? And then you'll see a massive exodus, just like the biotech sector. I mean, if we go to the chart of the IBB here, we'll go back to the chart of the SPY in a minute, but if we go to the daily chart of the IBB, look at the money flow in this thing, all right? So look at that amount of money flow, and it gets to the point where it just can't sustain itself. It runs out, and that's where it starts to collapse. And then you saw this 25% correction in the IBB. And again, if you look at stocks, there are other stocks out there. One in particular, if you look at some of the oil stocks like ExxonMobil, I mean, look at this chart in the short term. Look at the chart if you zoom out. I mean, the chart, again, getting to the point of being overdone, trading really at all-time highs on Exxon. Chevron's much the same, especially in the short term. And Chevron's actually into a double top area right here, which I think is very interesting right in this area. But bottom line is, these type of moves, especially considering what the earnings were for Chevron and Exxon, to me, you have to wait till money flow stalls on these. Now, I'm already short Chevron personally, basically flat to slightly out of the money. But once the money flow stops, these things will have very big pullbacks. In fact, what I'm projecting is you'll see a Chevron pullback when it does occur see this little pivot high right here, right around the 119, 120 level. That's where you'll pull back to. So it'll actually be about a $6 pullback very quickly on Chevron, especially if you look at their earnings. And I think that's the big thing. I'm not a big earnings person in terms of evaluating a stock only on its earnings, but when earnings were that astronomically poor, and this just draws, and this is a great little jumping point for what I wanted to talk about. So you look at Chevron. Chevron came out with earnings that missed expectations as well as revenue that missed expectations. The stock, for the most part, sold off a little on those earnings and then is right back up. All right, now take a look at a stock like FireEye, FEYE, which is getting brutalized, right? The stock's already down from $97 here. It's now trading at $27.67, basically at these, down all the way even further. Yeah, $27.67 all the way down here. And that's at all-time lows on this stock. But this stock actually beat earnings and beat on revenue. Now, they warned on the future guidance. So you might say, well, they warned, yeah, but at least they beat on current terminology or on current earnings. Maybe they're just setting the bar low for the next quarter, which they could be doing. But so what's the difference between Chevron and Exxon and this stock, FireEye, or Groupon? I mean, we could bring up Groupon, GPRN. All right, you can take a look at Groupon. Groupon getting hammered today, down 20%, folks. I mean, how about Whole Foods, WFM, down 18 or 19% on the day. I mean, these stocks are getting rocked. By the way, potential bottoming tail on Whole Foods here. But the difference is high beta versus low beta. All right, the difference is safe stock with a history, a long, long history, and dividend payer versus not. And that's really what you have here, folks. All right, especially Groupon and FireEye, relatively new stocks in the last couple of years. And you're looking at a stock like Chevron, who missed on both top and bottom line, but they've always been around. They'll be around for another 30 years, 50 years, and they pay a dividend. It's a safe play. And money doesn't care right now necessarily about earnings per se. They care about earnings plus volatility, or what we call beta in the trading world. And that's the key. So today, for instance, Zillow is reporting. Zillow is reporting earnings. It's already getting hit ahead of earnings because of the tech sector. But this stock, again, interestingly enough, I mean, look at the run it's had. If this stock, and I repeat, you can mark my words here, if Zillow does not blow out expectations on the top and bottom line and really meet or exceed guidance going forward, this stock will take a bloodbath too. I mean, they're going to have to, just because of, I'm just translating what we've seen in every other stock in the tech sector right now. If they don't come out with an unbelievably good quarter, top and bottom, every which way, then they will be down. You'll see it down 10% more tomorrow minimum. Now, if they do, then that's the one saving grace. If they perform ultimate array every which way, then they have a chance to move back up tomorrow and rally. Otherwise, look for this stock to see some selling, in my opinion. Okay, I mean, it's just the way it is. I'm just calling a spade here. And it's what we're seeing across the board. I mean, even look at a stock like Facebook, who really has outperformed on earnings across the board. I mean, the stock's not down tremendously. I guess, well, from its highs it is. But in recent days or recent weeks here, it's chopped sideways. This is actually making a bearish pattern, strangely enough. So I wouldn't be surprised at some point to see the gap fill and this 200 hit and actually taken out to the downside. But take a look at, like, LinkedIn. I mean, look at LinkedIn here, folks. And by the way, nice little tail on LinkedIn. Very nice tail today. There's actually a couple little instances. You can see the gap window got pierced today with the tails. So there's a couple little bottoming tails out there on certain key stocks, which we should continue to monitor. But, yeah, I mean, I would say the Whole Foods, you watch for a retrace. And even, I wish LinkedIn filled the gap with a bottoming tail. That's my one issue with LinkedIn, is that gap fill is really the level you're looking for. But we'll keep an eye on that and see. Another stock, AOL, missed on earnings, and this stock is getting roasted. I mean, look at this, down 23%. We're not talking about a mid cap or a small cap here. We're talking about a company that has a market value astronomical levels. I mean, this is one of the bigger market caps out there, $2.68 billion. All right, it's a big market cap, multiple billions of dollars. Or Whole Foods. I mean, Whole Foods, guys, take a look at WFM. Stock is down 18, 19% today, and this market cap's 14. Now it's 14.5 billion. But I mean, was much, much more this morning. So these stocks absolutely annihilated, guys, across the board. And if we look at Tesla here, guys, Tesla, another high volatility, high beta play. You can see the fall here. Look at this. See this connector right here? I'll zoom in on it. Okay? And right there, look at that. So that's ultimately, when this line breaks right here, you're going to see a collapse on it. So interesting to see there. Okay? So in any case, guys, I'm not going to waste your time too much more going into this. Let's go back to the spiders and just take a quick look. And again, let's just go back to the intraday. I think the intraday is the more important one to look at here. That's the 5-minute. Let's bring it to the 10-minute. And really what you have is a market that's slightly green. Had a big flush on early comments from Janet Yellen today. And then as she commented more, the market's rallied back. You're really stuck here. You can see this upward sloping trend line here. You broke down yesterday and you continued. Notice how you hit it on the opening candle and retraced right here. If that gets broken to the upside and this down-sloping one gets taken out too, so if you go up and somehow get above this area right here, then I think this market has legs to the upside. As long as you stay below, I'm going to be in a neutral to negative bias. That's the simple way to analyze the market right now, just keeping it kind of as basic as possible here for you guys as investors and swing traders. All right, come join the Swing Trade Alert service, read the Research Center at InTheMoneyStocks.com. And again, we'll see exactly what happened here the rest of the day. I'll give you guys analysis, and we'll go from there. All right, guys, I'll talk to you later. Take care.